Hello traders, welcome to the channel. This is Dr. Bijan, and today I'm going to talk about a very important fact that helps you to be successful in Forex trading. All right, let's get started. Okay, so basically this is the basic of what it takes to be a successful trader. It's simple and obvious, yet daily I see traders who fail at one or multiple key points that sink their performance, and they keep losing accounts even though these people do have the understanding of the market that would basically have been sufficient enough for them to be profitable if they follow the basic rules. Trading is as much about pattern recognition and capacity for abstract thinking as it is about the personality type, self-discipline, and specific mindset. The lucky few are born fit for trading, but others might train themselves. Below is the breakdown of the basics behind the day trading. Okay. So this is the basics pretty much. Putting them in general. Have a look, and then I'm going to breaking them to different parts, and each part I'm going to talk through. Okay. So first of all, this is 4 factors to make trading a business, not gambling. All right. So don't treat trading as a gambling tool. Okay, this is a specific business. We gotta look at it as a business wise and thinking straight as a business. That's the most important part. Okay. Okay. First of all, set and keep your risk reward. Okay, that's the fact. Okay. Risking no more than 1% of the deposit per each trade, which also implies using a variable lot size for every trade, so that no matter the stop loss size in pips or the pair you're trading, the dollar value of the risk remains the same with each trade. The way you are in full control of the risks you are taking. Okay, next one. Do not go all in. Okay, sounds obvious, but I've seen it so many times. New traders who lost 70% of their account in just one trade. Go all in on one trade that they think might help them. So one trade they take, they put too much risk, they lose, and then that's it. They blow up their account. Okay, stop doing that. So that's neither a way to trade nor a way to learn. Slowly losing your account while learning how to trade is simply a free that you are paying the market for your education. Accept it or fail. Okay, next one. We go with most important part. Protect capital. Protect capital. Simply use a stop loss. Okay, use a stop loss. That's the main thing. Remember that. I can't stress this enough, and I beg you to use stop loss. Do not enter the trade thinking that if the stop loss level that you had in mind is hit, you will close manually. You will not close the position, and the longer you hold it, the more is the temptation to wait a bit more because it seems that the reversal is coming soon. It won't happen. Okay, it won't happen. Next one, cut losses. Simple as that. Cut losses. What does it mean? It means set a daily loss limit. For example, you can ban yourself from trading for the rest of the day. If you lost more than 3 trades in a row, you will enter a vicious cycle. Remember that, a vicious cycle. This is a mindset. It's out of your hands, it's out of your control. That's why you have to sink it in your brain. Remember that, sink it in your brain. So you will enter what is called a tilt most likely, and you will not be productive that day. The same goes for a week. Lost more than 10% of the account in a week. Okay, stop trading. Next week. The market is always there. It's always there. 24/7, 5 days a week, 24, like 52 weeks a year, every year. The market is there. Remember that. Okay? No trading for you. If you hit 10% loss, that's it. Don't do any trading for that week. Okay? Watch the market passively or trade on the demo account. By the way, that can be helpful even for professional traders too. Okay, now let's go to how to improve your trading. Okay, that's the main part. Follow the tips that I'm going to provide you. These tips, you cannot find them anywhere else. These are just here. Okay, follow them, stick to them, sink them in your brain, and all right, the success will follow. Okay, so be disciplined. As I said, follow my tips. Okay, and try to put them in an order for yourself. Okay, make trading your own style. Okay, trade demo account, find your way of trading, and then move on. Okay, make a plan. Okay, find a suitable trading plan for yourself, which is basically suitable for your personality, for your emotion. This is the plan that is coming from your personality. Everyone is different. You gotta find your own criteria, all right, own conditions. Make a plan based on them, and then follow it. Okay, all right. That's the thing. Keeping a cool head is key. So the ideal trader is the one who can set all emotions aside as a robot would, okay, while simultaneously keeping the versatility of the human mind and the intuition that the machine lack. It's of utmost important for the new traders to understand that being right about the direction, but entering too early or too late is the same as being wrong, because the result will be a loss. Okay, here how to keep you cool. Okay, control your emotions. I cannot stress that enough. Control your emotion. Both euphoria and a panic attack are your enemies. So the more detached you are, the better. Emotions are for the casino, and we are doing business here. Remember. So what does it mean? It means if you have found your own plan, stick to your plan. When to enter, how to proceed, where to exit. Everything should be written in your trading plan. Follow your trading plan. Simple as that. Stop playing around. Stop mucking around. If you're going to muck around, use demo account. Okay, master yourself, master your emotions, and then come to this business. Okay, next one. Avoid FOMO. What is FOMO? That's fear of missing out. This has happened to me many times. All right, I open the chart. I've done my analysis. Then I open my chart. I can see that the candles took off, and then I'm just out. Panic, got in, and then the market reversed back. Okay, has happened to me a lot of time. Just remember that. As I said, set your rules, follow your rules. All right, and then you can find ease of mind. Okay, so that's what it is. Fear of missing out. Okay, all right. Next one. Don't follow others. Don't listen to people. Okay, don't listen to anyone. Avoid hard mentality. Remember that 99% of traders lose money. So doing what everyone does inevitably lands you in the 99% category. Okay, remember that. Simple as that. Don't follow others. Find your way of trading, set the rules, follow the rules, and this is the key to success. Okay, next one. Build a watch list every week, every month. Look at the currencies, do your analysis. Okay, set apart your currencies or the instrument you are watching, and then follow them and see, find the right timing to get in. Simple as that. So a lot of beginners try to predict behavior of the particular instrument that they decided to trade. For some reason, instead of going through the pairs looking for a ready setup that you know works, the former approach leads to finding patterns, key levels, and setups that just aren't there. Naturally, the result of trading, there is an inevitable loss. You should build a watching big enough for you to have a choice and go through it at regular intervals, looking for opportunities, but not inventing them. Remember that. Looking for opportunities. Okay? So that's what I'm doing. That's what I do. Every Saturday, every Sunday, I go through the market, all right, with peace of my mind, look at the charts, I analyze the charts, I find the pairs that I'm going to pay attention to them. I'll put them like I build a watch list for myself, and then through the week I just go and look at them. I don't do anything else. And then for the next week, that's the most important part. Okay, next one. Okay, consistency over boom bust style. Okay, what does it mean? It means consistent trading is the only way to make trading a reliable source of income. A slow but steady gains always beat leap like boom bust performance. The psychological pressure of the latter will most likely break you sooner or later. And who needs gray hair in their 30s anyway? That's how you achieve consistency. Okay, set a goal. 3%, 2% return in a month. Okay, 3% return in a month, that is going to be about 50% return like a year. That's absolutely fantastic. Okay, 5% return in a month would be more than 100% return for you. You won't find this kind of return anywhere. Okay, that's what I'm saying. Consistency. Okay, just think of about finding good, fantastic setups, nothing else. Okay, find a strategy. Do the research on multiple trading strategies. Pick those that you understand and that are compatible with your personality. All right. For example, go through my videos. I have put a few strategies up there. Okay, find them, read them, master them, then test them on the market on a demo account. All right. After getting familiar with it, okay, then implement it in your style. Okay, use it and see how it works. Do a lot of back testing, okay, to see how actually the strategy work. Okay, that's the main thing. Next one. Okay, use paper trading and back testing to select which strategy is right for you. Use back testing to see how the strategy performed in the past, and use paper trading to see how the strategy works in real time. Once you chose the strategy, go back to the paper trading and backtesting to polish it. Okay, hone it as much as you can, and then implementing it. That's the key to success. All right, next one. Track your trades. This is the most important part that I want to discuss about it. Okay, look, all of us, we do the trading, okay, but sometimes it's important to see how your trade has performed. Okay, so no matter it was successful or it lost or you lost, or track your trades. Look at it. Why you lost? Why your analysis was wrong, or why it was okay? Okay, remember that. Next one. So this is a trading plan. So that's what I'm saying. Formalize your rules, which is the trading plan. Objectivity is key for consistent trading because during the rough patches of the market, being sure of your rules helps you stay in the market, waiting for the tailwind wind instead of questioning your strategy or your implementation of it. Create strict algorithm and follow it step by step. In order to do that, you need to define every element of your strategy as precisely as possible. For example, a level for you is a daily horizontal level with at least 3 touch points. A breakout is valid only if the 4-hour candle closed above the level, etc. The less vague the terms, the fewer emotions will be involved in deciding whether to enter the trade or not. Okay, so that's the trading plan. You have the entry condition, you have your analysis, how to manage it, what a strategy to use, what's your risk level, and then the goal. This is how it's going to be used for trading. And always you're going to use the same thing. Stick to it, master it, and then follow it. All right. Uh, just don't jump from this to that. Okay, don't do that. Okay, as I said, that's the main thing. Stick to your strategy, use it, and then master it. No matter how it performs, okay, stick to it, and then at the end of the day, you will be successful. Okay. Next one, conclusion. So, if you want to become a trader, remember, first of all, it will take years to learn how to trade. Second, you will lose a ton of money in the process. Third, you will fail with 95% of probability. Four, realistic returns from trading are way lower than you think. And the fifth, but when you succeed, you will set yourself free. That's the thing, all right? So, patience, patience, and patience. Educate yourself, give yourself enough time. Don't haste, don't be hasty, all right? Don't rush. Just it is a process. It's not a goal, it's a process, it's a path. It's a path to improve yourself, to improve your mentality, your psychology, your personality, okay? And believe me, you're going to find interesting things about yourself that you haven't ever thought of that, okay? The different part of yourself, the hidden part of your emotion, the hidden part of your brain in this process. And once you get the hang of them and then you control yourself, that way you can set yourself free, okay? And that's the key to success. Okay, that's the end for today. So please support us by like and comment. And don't forget, if you like, give a thumbs up, subscribe to our channel if you haven't done so, and then click the bell button and you're getting notified if I'm publishing a new video again. All right, I hope you enjoyed the video. I hope it's helpful for you. Stay tuned. I'm going to publish tons of videos about the trading that help you to improve and get better in trading. Okay, have a wonderful time, people, and hope to see you soon.